Time now for our market monitor, who's finding opportunity in some consumer-related stocks he says should be in your portfolio for the long term. This is his first time joining us on the program. Tripp Miller is managing partner at Gillane Capital. Tripp, welcome. Good to have you with us. You say these stocks, the three we're going to mention, can double over the next 3 to 5 years. Let's start with Wynn Resorts, the big gambling company. Not concerned about Macau. That's been a problem, hasn't it?
Macau has been a problem for them over the last few years. They were very slow to open their Wynn Palace Resort, which they spent over $4 billion on. But we think that the data shows that things are improving in Macau. Most importantly for us, we see the stability that's been present for the last year or so in their U.S. operations. And there's multiple catalysts that are present in the U.S. that will offset some of that weakness in Macau in the short run. But we are bullish on Macau over the long run.
And you like the fact that Steve Wynn has his name on that brand. How do you feel about Penske then?
Sure. Like Penske, we like Wynn. Both brands, the CEO and chairman of the board are the brands. So if they do something to harm the brand, they're harming their own family name. They have a lot of skin in the game, and so their interests are aligned with ours. Penske, like Wynn, we believe benefits from a stronger consumer with more dollars in their pockets. They're both very strong global brands. We think that Penske has the opportunity to benefit from continued consolidation in the automotive industry across the globe.
Let's move on to number 3, which is Sonic. You call it an undervalued fast food operator, 3,600 locations. My sense was that Sonic's sort of peak, we sort of hit peak Sonic a few years ago.
Well, Tyler, the thing we like about Sonic is that they're aggressively repurchasing their shares as they go from 89% to 95% franchised. With that, they're loosening up CapEx. They're having additional free cash flow to fund those buybacks. We expect, and the companies led us to believe, that they'll return about 10% in buybacks to the shareholders over the rest of this year. And they have continued opportunity to open more stores, both domestically and potentially internationally, where they haven't gone yet. They're moving into the northern states with experienced operators in their franchise networks. So we feel like they could add up to 1,000 stores over the next decade.
Wow. But Tripp, at the same time, we just got finished talking about how these big grocery brands are focusing on organic and healthier foods because that's where the American consumer is going. We know that the big restaurant chains have had to strategize about how to include those on their menu offerings. How do you sort of coincide that with what Sonic offers, which is just good old-fashioned junk food?
Well, we agree with you that there is a big push into organic and healthier food. But Sonic, traditionally, most of their markets have been smaller markets where we feel like there's less of a focus on healthy. And let's face it, people love a good treat every once in a while. Children love it. And we like the fact that they've got a diversified model, that they get a lot of revenue at off-peak hours that other restaurants don't because of their sales of desserts and slushes and other treats.
Let's talk about the market generally. Give me about 20 seconds, your thoughts about where we are right now.
The thing that concerns us a little bit is obviously the low levels on the VIX and the fact that there seems to be a lot of complacency in the markets. Obviously, we set 11 new highs on the Dow. And so as value investors, we want to be fearful when others are greedy. And so that gives us pause as we look at businesses, not only domestically, but around the globe.
All right. Thanks very much, Tripp. Good luck. We appreciate it.
Thanks for having us.
Tripp Miller with Gillane Capital Partners.